All right. Hello, everybody. Welcome back to the channel. We are back with another episode of Palantir Weekly. This is episode number 172. And we got a bunch of stuff to talk about this week. Today has been a pretty exciting day in the world of Palantir. The stock is up currently, or it was up about 12% to end the day. We ended after hours at $66.48, a $150 billion market cap for Palantir, and a all-time high for the company. Over the past couple of weeks, we've had a couple of new partnerships that we'll talk about. We had DevCon, Palantir's first version of this, kind of AIPCon for developers. So we're going to be talking about all that stuff and then overall implications for the future of the company. I think the elephant in the room that everyone wants to kind of get out there is a pretty insane run over the course of the week and valuation. So a lot of the discussion today is going to be based on valuation. What is the market pricing in? And how do you justify Palantir at these levels? Arnie, Amir, Matt, thank you for being here. Arnie, we'll start with you. Raw reaction to the price action we saw today.
Well, it's probably needless to say that the price action has been wild, but as always, we need to try to figure out, okay, but what is the substance behind the run? And I think there are both components. On one side, we got some very, very big deals in the recent days. We got the Anthropic deal, then we got Rio Tinto, who became a client when Palantir was barely a new company listed on the stock market. And now after 3 years, we got boom, a major expansion. We don't know really the amount, but we can guess it is quite big for years. And on the other side, we got a crazy demand for the stock. That makes me think, look, there is high demand. There are not many companies available in the stock market to get into the AI theme. Hey, all the flows are going to Palantir, and I think we are seeing really that dynamic. Now, is it that concern? Well, let's try to discuss it later.
All right. Amir, your thoughts on price action today?
I mean, I think it's been a pretty insane year overall. I mean, to my understanding, the stock market has experienced some of the worst days of the whole year, and Palantir doesn't really care. I mean, people are really excited about this company, and valuation-wise, I mean, there's no story I can tell with the information that we have available that justifies the price where it sits right now. However, I mean, we know that institutional ownership has been increasing drastically. I mean, we're above that 50% mark now that a lot of people have been eyeing. And there's just a lot of excitement. And who knows, since it's completely detached from the operations, who's to say that it's not going to 70, 75, 80? I mean, when there's no, correlation to what the business is doing, then who knows? Might keep going.
Well, a technical analyst would probably say we are in a price discovery mode.
Price discovery mode, but I think most indicators would say that it's overbought. But I don't know. I don't track that. But yeah, I mean, it's exciting times. I mean, my wife recorded her first 10x in a stock on the stock market. So today. So that's amazing. I mean, as for the deals, Arnie, I think most of them have already been priced in valuation-wise because my model already expects that kind of addition of contracts to justify my expectations. But the whole catalyst thing, I think, is so powerful when a stock is in this kind of mood. Just anything positive that can be put out will really do wonders for the stock price in the short term.
All right, Matt, I want to get your raw reactions, but before that, I just want to play a little clip before we get Matt's raw reactions to price action today.
Guys, I wanted to check in. It's been a crazy couple of weeks. I appreciate all the congratulations and the thank yous and everything like that. But things wouldn't be that, they're not that crazy, you know? If things were getting that crazy, there'd be signs, you know? Guys, I just
So what's your thoughts on price action today, Matt?
It's just, it's euphoric in my opinion. We can go down a rabbit hole if euphoric means bearish, bullish, etc. And I'm really excited to kind of get into Amir's valuation numbers. So it'll be fun to be able to do that. I just don't know what to say. I mean, I never would have expected last year when we were having these conversations and the momentum was just starting to get building in to Palantir, right? I mean, I still think people thought it was a black box company and we didn't necessarily know what the hell was going on with it. And it's really just been quarter after quarter after quarter after quarter for the past 4 quarters now of just movement in the right direction. The pendulum is completely swung. And it's been fun to see people recognize that Palantir can actually be this generational type company. I think people could go back into the clips of all the conversations we have had over the past over 150 episodes. And I don't know when I showed up, episode 30, 40, etc., but I've been pretty regular since then. And I remember saying a $250 to $500 billion market cap wasn't out of play. And so to see that we're already at a 125 to 150, even if it's euphoric and even if it pulls back from here, just goes to show that, sometimes you can read, numbers and numbers can be a little bit off-putting. But if you have true conviction and you can see and visualize where things might go for a particular company and where it might fit into a total addressable market, how beneficial it can be in the long term to give a little trust. And I hope that people recognize that, valuation doesn't always matter. And sometimes you can be misconstrued. And that's something I learned even in 2019, 2020 is just like, sometimes, yes, the valuation matters, but more so on mature companies. When you're talking about companies that are just kind of fighting their niche and they're pushing their elbows to get a seat at the table, that's when true winners get made, and that's where you can make a shit ton of money. And so congratulations to everybody. Looking forward to the rest of the episode.
All right. So
Can you share my screen real quick just to...
Yeah, let's get into it.
I just wanted to add to my point I made earlier, like when the stock is kind of detached from the operation. So if we look at the price to earnings, it's at 308, price to sales is 60 currently, and then price to free cash flow 183. Now, my point was when the stock price is detached from the operations and actual valuation of the business, like, does it really matter if price to earnings is 308 or 350 or 400? Like at that point, it doesn't really matter. That's why I think like there's no real ceiling to this. Now, I don't expect this to continue into perpetuity. I expect this to end sometime. When that time is, no idea. But until then, like who's to say, like when it's this detached, why don't price to sales go up to 70, 80? I mean, that's just exciting times for Palantir. Well, what do you think, Amit?
No, I think it's a fair point. I think you're saying it's momentum, and momentum's controlling the stock more than any of the fundamentals. I think all of us have come to the conclusion that fundamentals are not driving this narrative. And that might be okay. And I guess we'll get into the numbers today to get into that even further. Real quick, Nicholas, thank you for the $50 super chat. You guys helped me understand this company, make life-changing gains. Thank you. Thank you, Nicholas, for being part of this community and keeping up with the content and being here. Arnie, go ahead.
Well, I was talking with a friend trying to rationalize, okay, does it make any sense? And my friend told me, Arnie, try to go back to what were your expectations at the beginning of the year. And in December 2023, so, well, more or less like the beginning of the year, we were asking ourselves, okay, but the stock has already rallied a lot in 2023. Can the stock can go higher? And the expectations from the analysts were very low, like we could see it from this chart, and even better from like this table. The analyst expectations were like, okay, this stock is doomed for 23% revenue growth. The funny thing is this has remained more or less unchanged, apart from a couple of analysts upgrading their estimates, like Mariana and Dan Ives. And the funny thing was that in like at the beginning of the year, these estimates implied that Palantir would grow less than the overall market. so the big question back then was, okay, but can Palantir do better? Because we were guiding for almost 20% revenue growth for the third quarter of 2023. And we were like, oh, but we know that Palantir has the potential to get there to the 30% growth. And now we got it. Like my observation was, okay, we are trading at around 14 price to sales, which is already like a nice multiple. But I wrote, well, Palantir right now is at $18, which is 14x revenues. If revenue growth accelerates to 30% in the next year, I believe Palantir EV sales could expand to 20x EV sales. That would correspond to a 66 free cash flow under a 30% free cash flow margin. But if that doesn't happen, so the growth doesn't support this valuation, well, it would be tough, because in order to sustain a revenue multiple above 20x, you need to have like stronger growth. And we got there. I don't know now how to interpret this article I wrote. It's like I was right on the intuition, but this makes me think, okay, but was my intuition like too weak, or now we are in the position where maybe the reality is too strong?
It's a good question. It's a really, really good question. And reality might be too strong if the AI momentum also continues to drive demand. So let's get into the reverse DCF to start this off. Amir, you can share that. And if you can show everybody what the current stock price at 66.48 is implying in terms of growth.
Sure. And also, just while we set that up, do you guys think that Dan Ives and Mariana will publish price targets above 60 now that momentum is there? I mean, they've been kind of competing, but yeah, I don't know. That would be funny. So let's just borrow the Dan Ives reverse DCF. Can you guys see this well?
Yeah.
We can keep Dan Ives there. So Dan Ives $55 price target implied something like 1.4% compounded, which would mean $71 billion of revenue in 2033, and that is almost 500% above the Wall Street consensus estimates. It just shows you like how detached Wall Street is in general. And then it would also mean 21.3 billion of free cash flow, but that's not enough to justify today's price. If you think that like the notion of $71 billion of revenue in 2033, that's bearish. Like we need to pump those numbers up. So let's just see what we need to do. So just adding 3%, I think, is what gets us to 65 or 66. So somewhere around there. Let's just say 44% CAGR. That's adding that 3%. We went from 71 billion to $85 billion of revenue in 2033. I mean, when you get up to these percentages, like even 1% is like does so much. And basically, this current stock price, to make sense of that valuation wise, like not pricing, not looking at the price to sales, price to earnings, but actually, if you would do it on a discounted cash flow model basis, Palantir would need to grow at 44% per year. And I don't know how bullish people are. I have them growing at like 44% for like one period during this time, but to constantly year over year for 9 and 1 quarter worth of period grow at 44%, that's kind of, I mean, I can't tell a story where they actually do that. Like I can't see it happening with the information that I have available right now, but who knows? I mean, what are you guys' take on that?
I'm sorry, go ahead, Arnold.
No, go ahead.
Let's do Matt, then Arnie, go
ahead. Where's my headset? Oh, I have my beanie on. That's why I can't hear as well.
Too rich to forget where your headset.
Yeah. What was I going to say? Curious. So the 11% discount rate, is there a reason why you chose 11? Because I think, no, I'm not poking any fun. I always enjoy your.
No, you're right.
Models,
Let's do it properly. When you do a reverse DCF, it's important to use market expectations. and not your own bias. So I added my own 2.5% execution risk. Let's remove that. So we only use the implied equity risk premium for the month of November. This is calculated by Aswata Modern every month. Basically, the equity risk premium and the applied equity risk premium is what investors expect from the market above the risk-free rate. And you can calculate that monthly. We're not going to get into the formula for that. And then I use the risk-free rate as a proxy for, the 10-year as a risk-free rate proxy. So when you combine these, you can get the discount rate. All market implied. There's no own bias there. And I also use the terminal growth rate because economists can't even predict what the next quarter of growth will be for the economy. I just use what the market implies there as well. Just to remove any bias, I use the risk-free rate as a proxy there. So now that we removed that 2.5%, we get to 120. So you're right, Matt. It makes sense to actually see what it would mean. So instead of 40%, what happens when we do 44? At 40, we're at 92. Okay,
Wow,
so
that's really
35% actually. 35%. Now that's actually viable. That's actually...
Guys,
How much
simple
revenue would that
observation.
be in 2033?
That would be 44.7 billion. So way, way lower than that 72 or 90 plus.
And it's crazy because if you look at that 35% and you get rid of that additional 2.5% execution risk, you get to that 4 billion that CARP actually announced probably like 10 quarters ago.
Yeah.
You mean the
For 2025, yeah.
2025, yep.
He said 4.5, yeah, but yeah.
Oh, did he? Okay, sorry. Thank you for correcting me.
But still, yeah, you're right. Like, this is actually plausible. I can actually see a world where Palantir compounds at 35%. So that changes everything. If we only use market implied expectations now, in reality, if you would actually value Palantir, you would need to have some company specific risk as well into the discount rate, because the discount rate, essentially, it just captures risk. And these are only using the market wide implications of risk. So there's nothing specific to Palantir here. But still, that changes everything from, what did we say, like 44% to 35% compounded. I mean, that's, now you can actually have a conversation.
Look, when I was working as an analyst, I once got my my boss because I said that the WACC, like the discount rate, is a mathematical aberration. Is because it's like that number you put to get the valuation you want. Like, how we do really know if the real discount rate for Palantir is like 9% or 11%. And if you, what I noticed, could you share the screen again, please? Just to see how this simple number that is speculative by its nature, because we can't really say, oh yes, for sure the discount rate is 9% rather than 11%. Like, look how much it changes from the valuation, just the number alone. Now the model has 8.5. Just try to make it 11. So just 2% more. Boom, the valuation almost halves. So what if the real discount rate then is actually even lower than that? Because then the market starts implying that the inflation is slowing down, rates are going down. So this to say, there are numbers in the valuation that we can speculate on. We can have an intuition, and our job as analysts and investors is to test the price, to know how optimistic in the range we are. And there is one key argument that I would make to the number. The big challenge I see from the absurdity of the numbers is a simple one, but I think a very powerful one that we should take into consideration. The AI searches is exploding. So what this means, AI is right now the word. Now, is it a bubble? Is it a thing? Probably right now is a little bit of both, but I think they feed each other, meaning that it is this high interest in AI that makes a lot of things happening, and is not only peak interest, but is something that, given the high interest, makes a lot of business moving faster. And in the case of Palantir, we got the intuition. We have like almost the certainty that right now Palantir is the only player that is providing massive value from AI at scale. So this to say, yes, based on the fundamentals and the past that we have seen, the valuation is very stretched. But there are certain conditions, read the very peaking interest in AI, that could have like a dramatic effect on the business. Now, think of Tesla. Once the conditions for the business were like perfectly aligned, and we started seeing like the revenue like literally skyrocketing because there were relatively low rates, people had a lot of money to spend, and Tesla was completely ahead into the product, into servicing clients in a remote way that essentially monopolized all the flows in the business to Tesla, and also the stock, because that was like the pure EV play. This to say, obviously, then we can reach even more excesses, but there could be like fundamental reasons why like the context really changes also for the business.
I just want to clarify, because I think many people are not familiar with the process of valuing a business intrinsically. A DCF approach is just one of many. There are many ways to do an intrinsic valuation, but I just want to clarify that, because it looks kind of like a parody now, like you change a number around and it changes everything. So who would even so if we take my valuation model, this is a tool for me to aid me in my investing. So it uses my assumptions. This is not like some objective truth. When you do intrinsic valuations, as you mentioned, Arnie, like an assumption can change everything, but it's a reflection of your expectations from the business at the point in time of valuing. Like this can change by next quarter dramatically, or not at all, but it's to aid me in my investment approach. So not like some objective truth where my expectations should be followed by the market. It's just what I use in order to make sense of, okay, do I want to invest or not? So I just want to clarify that, because yes, it does look kind of like a parody when you just change the discount rate and you like half the price with 2%. So there's no objective truth to this. I mean, we can just, in the case of a reverse DCF, where you start with the actual output and you try to work your way back to see, okay, what are the numbers going to be? That's just an exercise to kind of gauge what the expectations are implied with the current stock price, but there's no like actual objectivity to it at all. So that's why I try to only use assumptions that are implied by the market, like we talked about the risk-free rate, the implied equity risk premium. But just I wanted to clarify that for the viewers, that we're not trying to like objectively say like this is the truth, like Palantir needs to grow at this for this to be worth. No, it's just a hint, an exercise, so to speak. But when you value a business yourself, it's just your own assumptions and your own expectations to aid you, not to aid someone else or be some kind of truth for the stock.
So, based on your own assumptions, what is the least value Palantir should get? Like the minimum value from which?
A minimum.
Okay, yeah.
I mean, I don't think
I think he's basically saying, what do you think is the floor?
Okay.
No, there's I don't operate with floors. I'm just like, okay, how much below fair intrinsic value is it? It determines how much I want to invest in terms of like how much of my portfolio I want to allocate. But if we just leave that talk, like the modeling talk, a floor for Palantir, I would say anything below, given all the circumstances, like it's the software prime. It's the prime AI solution that's out there. I mean, all the momentum, I can't see it. For it to be so detached from the actual value of the business, I think it's worth somewhere around $47 currently. That's a story that I'm comfortable telling, but I can't see it below 35. Like I can't. Like there's
I agree.
just
Yeah.
too much going for it. Below 35, I don't see happening. More realistically, if we were to let's say that Palantir would report some negative news, like we're only getting positives, and I think the market is waiting for that one negative
Catalyst. Yeah.
catalyst to just propel the stock into the abyss, if that were to happen, I think we can see like a 20-30% like just cut in a day. I mean, there's just so much expectations into the stock price, but still I don't see it below 35 anymore. It would be too detached to the downside while we are detached to the upside. Now I don't see it below 35 given the current conditions for the business.
So if you think like it is hard to see it like below 35, but we are now in the stretched part of the upside, it means that for you, like what is fair right now is more or less in between.
Yes, maybe a bit more to where we are today, because one thing I noticed with Palantir is that they kind of justify a premium by themselves in a sense that every quarter that passes, my intrinsic valuation for the business just increases like almost exponentially, because we get so much more information to allow us to understand the business better. And it's just like the intrinsic value just keeps expanding like massively. I already had big expectations for the company like the whole year, but every quarter that passes, my understanding increases. And like for example, this past quarter, we're like, okay, what are margins gonna do? And when you change margins around, like it changes a lot for what the business should be valued at. So I mean, I think that even though I'm at 47, I can still justify something like a low 50s, like it's not out of the realm of the imagination at all.
And look, that's the issue, like how we discussed last week. The margins now are very high, but if it is true that Palantir can really operate well with AI on its own and really deploy like cash effectively to keep sustaining the operations, and they are really growing without spending that much in marketing, what if like they actually spend in marketing well enough to even multiply that effect? And I find it interesting that if you share the screen, please. You're saying, look, I struggle to see it below 35, which is more or less what the average analyst consensus is right now. And if you have to say, okay, let's exclude Mariana and Dan Ives, how do you generally see the other analysts between like being bullish and between bearish, based on like on the commentary, but also like the expectations that you have seen?
I just checked it. So excluding Dan Ives and Mariana, the average price target is 27, which is, I mean, it's just absurd.
Yeah, so let me get laughed at here really quick. So I'm not the smartest one in the room, so give me some rope. So I'm just kind of looking at where I think free cash is going to be within the next 1 to 2 years, and then not using what I think it is, right? But you asked floor price, Amit, and so I'm trying to think like if the pendulum were to swing the opposite direction from where it is today, because I think that we can agree that the pendulum has swung completely the opposite direction. But if for some reason heads were to turn, the market were to flip upside down, which we've seen happen before, and there's black swan events like COVID and stuff of the like that drive us to that. What do I think the actual floor price is? And I think that honestly, it's going to be floor price, right? Never going back below again, $29. And how I got to that number was basically taking free cash flow of about $1.5 billion, which is a couple years out, and then adding about a 45 times multiple to that, which I don't think is too crazy. Sorry, let me just double check. I did 45 and I didn't. Yeah, I did 45. So $1.5 billion times 45, that gets you to about a $67.5 billion market cap. But then I added $5 billion for the cash that's going to be on the balance sheet. So that gets you to about $72.5 billion market cap. And then obviously we have about 2.5 billion shares outstanding. So you divide that $72.5 billion market cap by the 2.5 billion shares outstanding, gets you to a ground floor, in my opinion, of about $29. And I know that seems absurd, right? But you have to think, literally, before 2Q earnings, we were in the $29 range. So it's literally been less than 60 days since we've been in the 20s. And I think a lot of people are probably sitting here saying $29, this guy's a goddamn idiot. That's literally 50% cut from where we are. But you have to think, in my opinion, I think everyone can recognize that we're kind of in irrational exuberance at the stock price at the moment. Like I said, that is literally the ground floor. If everything in the market, right, I'm not just saying Palantir only, but everything in the market goes in the opposite direction. But even still, I think you could see a case where price to free cash flow drops even into the high 30s. But to me, I think this company is so unique that I don't think people would pay below a 45x price to free cash flow multiple.
So Matt, sorry, if I understand correctly, do you see a 35x free cash flow, not now, but as let's say in 5 years from now, as the fair multiple that you would have?
Yeah, and I'm kind of using what Steven always brings up, a really good plot that shows the average of Salesforce, Amazon, Google, and what their free cash flow kind of looks like. And I would say 35 is probably good, right? Mm-hmm. So I like that 35 number, but for right now, knowing how young the company is and it's still kind of growing in, I think that 45 is okay.
Mm-hmm. It's interesting because when I heard that, I thought, give me Palantir at 35 right now, and I would just throw all the money. But the big question, since you're not saying right now, Palantir should be worth a 35x free cash flow, but in a steady state, it really comes out to what could be the steady growth of Palantir, because right now, tell me if I'm wrong, but Microsoft is more or less growing at 10-15% in terms of revenues, free cash flow, and its valuation is more in the 35-40x. So it really depends on the growth, because this simple comparison makes me think, okay, if Palantir could actually keep growing 30% in 5-7 years from now, I think people would be more than happy to pay more than that. But as we said, it really depends on the growth that we are attaching to this future.
And look,
right, it depends if you're looking at forward 12-month price to free cash flow. If you're looking at, because I used $1.5 billion, we're not at $1.5 billion right now, right?
Also
so
it's
hard. Yeah, and we're already kind of
mm-hmm.
For me, I'm already kind of growing it. So I agree with you. I think from a steady state, I think 30-35%. But if you're looking a couple years down the road, then you might have to, because I agree with you. If you're growing at say 20-30%, then that free cash flow is going to grow massively quarter over quarter. So I could see where you want to put it at a maybe 40-45x. Anyway, just some thought.
Look, let's have the conversation where $65 makes sense, because that is a conversation to be had. I think one of the scariest things as an analyst of Palantir is the TAM question. Palantir literally can target every kind of software business there are. I mean, and it's just too big of a question to even attempt to conceptualize. I can't go after it. I can't, if we just consider all the opportunities laid ahead for Palantir, ads, BI, business and analytics, ERP systems, CRM, IT, SM systems, e-commerce. I mean, the TAM is truly endless, and I think no one can truly conceptualize it. I mean, we can just look back and be well, growing at 30% kind of can make sense, but no one can really attach it to some kind of a TAM expansion for Palantir. Like when I do my valuation, I'm kind of a chicken in a sense, because for the government, I just attach it to the Department of Defense spending and the budget going towards AI, and then I extrapolate that. For the commercial business, I just take AI market, AI software market projections, and then I just attach a market share for Palantir. But I don't really do like all this scary work where I look like at, okay, in terms of CRM systems, what's the market opportunity there? What's the market opportunity in ERP, in BI, in ads, in ITSM? I mean, the TAM question is just so scary. And to date, correct me if I'm wrong, I haven't seen anyone try to tackle that. Not analysts, not individual investors, not the retail, like no one, because it's just too big of a question. But Palantir can essentially go after all of that. Corp has been pretty straightforward. Like, I'm going to take the whole market. We're going to take the whole market. And no one really can conceptualize, okay, what does taking the whole market mean? So there is a world where $65 today can be justified. It's just that I can't tell that story because I don't have that deep enough understanding. But what are you guys' thoughts on this like endless TAM conversation? I mean, and even building out completely new software avenues that we can't even think about right now, because they are developing more and more platforms, going after more. I mean, Apollo is barely talked about as a deployment software. I mean, they just do so much, and with so little resources, as we've talked about in a couple of weeklies now, R&D spend isn't really increasing, but they're pushing out all this stuff. I mean, we had the DevCon now where they like empower buildings so they can even like be have a marketplace and collect fee revenue. I mean, where does it end? Like, I just want to get some thoughts from you guys on that question, because it's one I'm having a really difficult time to actually conceptualize myself. So I think it's a good conversation to have.
Look, I think the potential from the beginning was, I can't say clear, but we understood as investors, okay, like the potential for this company is truly massive. What is even massive, more massive, is like how much more there is right now that we could add to those expectations thanks to the development of new products. Like when we started figuring out, like Palantir can almost solve any potential issue in the enterprise space, in the government space, we were thinking of Foundry. And then with AAP, we have like a new massive layer of potential revenues that could be added on top of that. And now with Warp Speed is just like the little piece that could make us think, like we were thinking about more Palantir being like the operating system, data platform, data analytics and stuff. But now it seems like, okay, like Palantir is obviously obsessed into taking all the pieces of the software enterprise software stack, like going on the end against SAP, Oracle, all these legacy guys that are not just analytics, but they're more like software to really like deploying resources into perform quality checks and stuff like that. So basically, the TAM. Do you remember like the picture of like the TAM of Palantir with the cycle? It's like every year it's just boom, 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 boom.
I'm gonna find that.
So once we know like the potential TAM is massive, it is really a matter of how much can Palantir acquire of that. And there was this sentence from Karp that we build software that is like 5 years ahead of the market, and we are making essentially a very risky strategy, because by doing that, we are essentially betting on the fact that at a certain point, there will be that market fit between what the market really needs and what we offer, but between needing something and realizing you need that something, there could be a gap that made the adoption of Foundry relatively hard to digest. But now this could change dramatically. And I'm referring to the picture I shared before. Like now the interest in AI is so high that it makes clearer and clearer that companies want, on top of needing this stuff, to actually work in between. And we are seeing the government side accelerating because the government is accepting that in order to deter another World War, they need to use AI into autonomous systems, into deploying like their own resources and stuff. But also companies realize, oh, we need this stuff to become competitive. And what if, like what we started seeing as, US commercial growth of 50% is actually very good. But what if, like now we are seeing the network effects kicking in, and rather than expecting a rather like a gradual deceleration, we see like, oh, like the market fit is so strong, then we got like an acceleration from here. Is it even possible?
Yeah, I was gonna. I think the one of the only ways to really value it right now is TAM, and I agree with you, Amir. No one has been able to come up with a concrete analysis around TAM because it's such a hard thing to conceptualize. I think Mariana kind of got close to it on the $55 price target she put out. She said a juggernaut is emerging where Palantir will be a foundational decision-making platform for new types of technologies. I mean, she even mentioned quantum computing as some mechanism that Palantir will play a role in, and so. I think if you're buying it at 65 right now, you're buying it because you believe you can't miss the story. The story is expensive, but you don't care because you can't miss it. And the potential of the story is only being seen through a few stocks, one of them being NVIDIA on the hardware side, and then on the software side, like really Microsoft, maybe Google. Those guys are in a totally different league. But in terms of a company that's still relatively small compared to what people think will become normal for $1 trillion companies to exist, multiple of them, not just 5 or 6 of them in the next decade, then Palantir is there. And they just have a fundamentally differentiated approach. You know, Chris Camillo came on the podcast a couple of weeks ago on the channel, and he said he doesn't give a shit about PE, price to sales, because he just thinks they're so differentiated that the market's eventually going to go with them. And he turned out to be right. He said that at 35. Now we're at 65. And so far, it seems like the market truly does not care. I mean, $150 billion market cap for $2.8 billion in revenue, $500 million in profit, 33% of that profit being from treasury bill net interest income. There's no way you can really make sense of the numbers outside of saying they will grow so rapidly into this emerging market, and no one will expect that growth like no one expected with NVIDIA. And then it'll be one of those stories of like, oh, how did I not see this coming? And I think no one wants to be afraid of being left out.
And are you comfortable investing into that at these levels?
No, not personally for me. No.
I mean, that's the point. Like, if a stock keeps going up this much, it's because someone is actually buying that. And from what I see from the community, like the retail investor community, at least, like the core we see on YouTube, X, like they're mostly holding rather than buying. Correct me if I'm wrong, but that's my perception. So, who is actually buying here?
Well, I think the part of it is the fact that people are holding. Right. I mean, if people were taking profits, then, I mean, granted, you could say and claim that Carp and Teal are kind of have performed, I guess, a headwind against where we actually are today in the share price. But if you actually saw a mass exodus of retail investors to institutional, I think we might still be in the 45s or 50s. But the fact that I think everyone's still holding on because they see the true potential, or they've been at least watching too much emit maybe and not willing to share or sell, I mean, then I think that's why pretty much every share that has been on the market has been gobbled up by institutions, knowing that they're going to need it for S&P 500 inclusion. They're going to need it now for Nasdaq inclusion. And so I think that's really where all the shares have been gobbled up. So anytime somebody is selling off anything, it's immediately getting bought up. And so my fear is once we have a potential bad earnings print, or if we don't say increase sequentially quarter over quarter like expected, then I have a strong feeling, and that could be due to the rule of large numbers, or it could just be the fact that we just don't get an earnings print that we want or revenue growth that we want. It could I agree with Amir that it could drop pretty substantially in a single day. But I also think when it rains, it pours. So I think that when, let's just say, people think that there is a pullback coming, and you do see a 5 to 10% pullback, other people are going to get scared. They're going to realize that, oh my God, a bubble has popped, and you're going to have exactly what happened in January, February of 2021, where the stock price eventually fell. And I think somebody said in the chat, from $45 intraday, it was $38 at close. And then over the subsequent 18 months, it dropped all the way down to $6. I'm not saying that's going to be the case, right? We're in a completely different place from where we are today than where we were then, literally 18 to 24 months ago. But at the same time, you'll see something comparable. It's not going to be exactly analogous, but expecting maybe a 30, 40% drop isn't out of the question.
I think let's end off the show then on this, because we didn't really talk about the implications of it. But the reason Palantir was up 12% today is because they are now transferring from the New York Stock Exchange to the Nasdaq. The Nasdaq 100 index is a very important index. The QQQ ETF, which would be tracking the Nasdaq 100 index, is the fourth largest ETF in the world as per inflows in 2024, $28 billion, and it manages 318 billion assets under management, which means if Palantir is included on the rebalance, which is December 20th, if not then probably by early to mid 2025, they would be in the top 30 companies of that index, and a lot of funds that buy that ETF would have to buy a slice of Palantir. Same thing with the S&P 500. So, Arnie, your thoughts on if that is a real catalyst and what that means for the future of Palantir?
To be honest, this was completely unexpected. I remember I was confused a little bit the first time I saw Palantir was listed on the New York Stock Exchange rather than the Nasdaq, because in my mind I thought it was, oh, come on, it will be obvious that Palantir already belongs to the stock exchange, more tailored to to technology companies. But no, maybe that was because it was easier to make it on to make the DPO on the New York Stock Exchange. And now they feel, okay, now we are mature, we are getting we are starting to be considered serious. Let's make this final step to make the stock as a tool even more appealing from this institutional standpoint. Something that I think people who work in the financial industry have a better sense on is in the same way you can have a bag that it has if it is from a better brand, it is perceived as better. In the same way, characteristics of the stock make the stock more or less appealing regardless of the fundamentals. And being listed on the Nasdaq Stock Exchange as a technology company is actually something that could be seen as positive. As you mentioned, Palantir is already big enough, actually very big in comparison, if it holds the $150 billion market cap. And just to see visually how it would end, I took the list of the components, and Palantir would be as of today, if it entered, it would be just after Amgen, after Booking, which are companies that already very known, very similar to Intuit, Texas Instruments, Qualcomm, and so on. So, and Starbucks, I remember it was more or less that. But this to say, okay, Palantir, if it keeps this valuation, it would be considered among the very big companies in the US. I was wondering, I asked Perplexity, give me a sense what were the latest companies that moved from New York Stock Exchange and the Nasdaq, and let's see how what were the implication. This company, Psych, So Application International Corporate moved in February 2024, and this was the reaction of a stock price. So February 2024, essentially, it helped having an initial reaction here, but after a bit, then it doesn't seem like that changed completely. Like the stock moved up, moved down, but the initial reaction was effectively positive. And then I saw another reference, Campbell Soup. That's not really a technology company, but we need to remember that Nasdaq is mainly targeting technology, biotech stuff, but there are also companies that are neither of the two, like Pepsi or like Campbell. And Campbell moved in August 2024. And what was the reaction? Well, also here, like a bit positive, but nothing that was completely groundbreaking. And then if there were reasons for the stock to go down, the stock went down. So more or less, does this have implication on the stock price? Yes, generally positive, but is not structural. That meaning, okay, if the stock enters the index, enters the stock exchange of the Nasdaq, now it is infallible, it can't go lower. But it is also true that the appeal on the stock increases, which we know that for this kind of companies potentially could have like a ripple effects also in the business if the stock of the company is perceived as more glamour, because it helps lowering the friction to adoption.
Mm-hmm. One of the things I want to give people some context on, and you kind of alluded to this earlier, Mitt. So May 2021, the NASDAQ actually proposed an amendment to allow direct listings onto the NASDAQ. And the reason why it may not have happened on the NASDAQ is because it waited. Let me see the number, it was actually accepted by the SEC in December of 2022. And so it seems like direct listings were not previously a reason or allowable, which I think it was one of the things that there were several companies that were trying to do direct listings, notably what companies? Obviously Palantir, Slack, Spotify, Coinbase, several other more mature companies that didn't necessarily need as much capital, but did still want to get some. And so I think that they have suffered because of that. So they did apply in May of 2021. Obviously, we know Palantir went public in September of 2020. So that was probably one of the key contributors. And now we have Palantir joining the NASDAQ. I guess my other question was specifically, it slipped my mind. But anyway, I just wanted to feed that context into why maybe, and I guess why it didn't direct list on the NASDAQ.
That could very well be the initial reason, but I just want to clarify that a direct listing and a direct public offering, a DPO that Palantir did, are not the same thing. So a DPO is just that the company themselves raised the capital instead of going through banks, like on a traditional IPO. A direct listing is just making your shares available on the exchange, so you don't actually raise capital. But that could very well be the reason still that they just felt that, well, it would be much easier to do it on the New York Stock Exchange that already had a direct listing process in place, even though they didn't actually do a straight direct listing. But I'm no indices expert, stock exchange expert, so I don't actually know the details there.
It's specifically with respect to direct listing capital raises that they noted and applied.
Oh, okay. Yep. Yeah, so then it makes sense why they did it. Good. As for like the Nasdaq 100 inclusion,
I think the word is bullish, right? Like,
look,
bearish.
We actually have an index inclusion under our belt, but even with the S&P 500 inclusion, can we say that this rally is the result of the S&P 500 inclusion, or is it a rally because the story around the business has completely changed? to the positive. Now, is S&P 500 a part of that? Maybe a tiny bit, but I think like the rally we're seeing is more or less that Palantir is executing. It's not that we got this S&P 500 inclusion. So I think like it's really easy to get lost when you look like, okay, this company was set to be included at this date. What did the stock price do? Like, I don't necessarily think there's always a correlation there. And for Palantir, I wouldn't say that S&P 500 did a whole lot for Palantir. I mean, we got a couple percentages on the announcement, but since then, I mean, it's been, I don't know. I think it's more the company executing and the narrative around the company changing completely. Now, S&P 500 might very well be a large part of that narrative that's being told for the company, but I don't know. As Arnie mentioned, they should already be completely eligible. It's way less strict than S&P 500 inclusion. Like the only thing about the Nasdaq 100 is that they exclude financial businesses like banks and so forth. But yeah, it makes more sense for Palantir to be on the Nasdaq as a tech company. It's widely seen as the tech exchange in the world, so it makes sense over the New York Stock Exchange. But yeah, I don't know what to expect from the listing and the potential inclusion. I don't know if we're gonna have to wait like we did for the S&P 500. Probably not, because yeah, it's just too big of a company now, has too much weight around it, and it's way less stringent to join the Nasdaq 100 compared to the New York Stock Exchange. So yeah, not too bullish, but I guess it's a positive net.
Well, as a bit of reference, I just searched how big are the biggest, or at least the more known ETFs tracking the S&P 500, which is the SPY, and the Nasdaq, which is obviously the QQQ. Because how it happens typically in this sector is once there is like a dominant ETF, flows tend to converge into that one. Maybe and here we can see that the QQQ, which is the ETF that is generally known for the Nasdaq 100 composite, where Palantir could be included as one of the top 30 components, is more or less half of the SPY. So like the real effect based from this information is that yes, that would help liquidity even further, making the stock exposed to even more flows, meaning that if more and more money comes into these ETFs, then the stock naturally has like a more buying pressure. Maybe like the gun, Matt, I think you're more into this. Like, what's the name of the gun Vanguard?
VOO.
VOO. Let's see also that one. Oh, okay. So even VOO is very similar to SPY, which means that the overall net effect from the SPY inclusion is probably much more than the inclusion in the Nasdaq. Does it make any sense?
Yeah. I think at the end of the day, it's definitely bullish, but I agree with the mirror. We're gonna have to see kind of over the next few months and years how the rebalance plays out and what it means for other derivative ETFs that are tracking the broader Nasdaq 100 outside of the Qs. But it caught me off guard as well. Like yesterday, I don't know, Thursday, yeah. So yesterday when it broke, the news, I did not expect that at all. Did not see that coming. But we're here, and it has allowed momentum to continue.
Happy to be surprised.
It was not bad news. Definitely not. All right, everybody. That's it for us. Go ahead, Arnie. One more thing.
Well, I would say let's give a couple of minutes, or at least like I want to recognize like how cool it is to be like in a community like Palantir, but we are not the only community crushing it. And as a matter of fact, we have here someone who's crashing on both communities, because someone is not investing in one rocket, but in two rockets. So big shout out to Matt, because like share the screen, please.
I was going to share it as well. Yeah, there you go.
Like
Look at that.
We are pumped for Palantir rocketing, but Rocket Lab actually in 1 year rocket even more and much more. So congratulations to Matt, Vince, Coach, like all the other guys that have been following Rocket Lab, because it is really amazing to see how smaller retails can actually get ahead of the institutionals just being obsessive into something.
I really appreciate that. I actually want to say that the due diligence that we've done here in Palantir and being able to look at a company, look at its forward trajectory, and acknowledge how there's catalysts coming up and de-risking over time is really the same exact approach that I took into Rocket Lab. So I took an initial position in Palantir, everybody knows, in September of 2020, direct listing day. And at the time, that was $10,000. It was a lot of money for me. I was literally just flying back and entering and repatriating into the country. I was living in Trinidad and Tobago, and I was on the Jamaica line coming back from JFK to take a train home to Philadelphia to see my parents. And it went through. Surprisingly, I was surprised because nobody really knew where it was going to open. Was it going to skyrocket to $15, $20, or was it going to? It actually started at 10, went up to 11, dropped down to 8, and I was just happy that I got my 1,000 shares. But it was really the acknowledgement, looking, pinpointing, and being like, this is where I know the company's going to go, and following quarter by quarter, doing the due diligence, and recognizing that there's potential down the runway, and applied that same sort of thought around Rocket Lab. And luckily, I've been able to invest about two to 2.25 maybe times as much money into Rocket Lab as I have Palantir, and it's grown into a pretty sizable position for me, and it's nowhere near done. Luckily, Palantir's done a phenomenal job, but I still think that Rocket Lab's got some additional time. I mean, they just came out with SpaceX saying they'd be about $250 billion market cap valuation. Tender offering here in the next couple of weeks, and Rocket Lab just closed today at about $9.5 billion market cap. So a lot of room in between the two. Obviously, SpaceX has about a 10-12 year leap ahead, but at the same time, we'll see where it ends up. But I appreciate the really kind words, and really happy that everybody that has followed it has made money. That's what makes me the most happy. But at the end of the day, just like with the Palantir community, it's nice that we can kind of be this lens and these messengers, but at the end of the day, it's the people at the office that are actually executing day to day, the employees, the leadership that are really top tier, and phenomenal engineers and data analysts that are actually the ones putting in the work. And so it's really cool to be able to take credit, but in reality, the credit is due to them and everything that they're really pushing in terms of getting things innovating, and making customers happy at the end of the day.
Mm-hmm. Just today I received a comment, hey Arnie, like, you are too obsessive into Palantir, you bring everything to Palantir, this is like a sickness. And say, well, sickness, being obsessive into something, waking up at 4 a.m. For us, but staying Friday night for you to make a weekly is an obsession, okay, but we have evidence that obsession
it's a pretty well-paying obsession if it's an obsession. So, no, 100%. And also, I agree with you, Matt. Like, a lot of times, the experience in one stock should help inform the mistakes that you make, and then help you get better for the next stock. So, I think you've said many times publicly you wanted to go even heavier in Palantir, and you just didn't for whatever reasons. With Rocket Lab, same conviction, same thesis, same understanding, same retail community you're creating, same due diligence, and you go even heavier, right? 2.5 times heavier, because you're like, all right, I learned this from Palantir. What can I bring to the next one? And it's just amazing. I think everyone gets better as an investor as they're able to do that. Doesn't mean you get every stock right, but when you have that conviction and you are able to go heavier because you genuinely believe in it, it just means greater returns for the long term as well.
Congrats, man. Well done, Matt.
Thank you, sir.
All right. Thank you, everybody. Jake Paul and Mike Tyson are fighting right now. I'm sure everyone's going to go watch that. They're around 2 of 8. I called him Jake Powell today, so I probably need to take a little break from stock market news. I was like, who's gonna win, Jake Powell or Tyson? The whole chat was like, who the fuck is Jake Powell? I was like, Jake Powell. I was like, wait a second.
Jerome Powell.
Jerome Powell, Jake Paul. But yeah, enjoy the fight. Thank you, everybody. We'll be back next week, and we will keep analyzing Palantir forever.
Continued success, everyone.
Bye, everyone. Have a good one. Good night.
Bye.
Bye.